It's time to actually dive into the market cycle. So let's not waste any time and let's get into it. I have opened up a article from RR2. You can check this out, and it's almost like a roller coaster of emotions and cycles. But this is something that when you understand, it automatically changes how you buy and sell your coins, right? So understanding a little bit of this is very important, especially when you try to trade, because you cannot just buy a car and keep a car. You really have to be a mechanic, half a mechanic as well. If you get into crypto, you really must understand the very basic. And this playlist is, by the end of this playlist, man, I'm telling you, it's going to change a lot of things. Just understand this. Whatever I'm telling you, just stick to this when you're starting out, right? I'm making it easy as much as possible based on my experience. I'm going to skip this whole article. I'm not going to go through that long article. I just want to break down the end result of it. Psychology of a market cycle, right? Psychology of the market cycle. One is your psychology, which I told you in the beginning, that this is how you think. You have to buy low. You have to enter when the river has come down, the storm is over, and you have to shop based on a Black Friday mindset. That's human psychology, your psychology, right? Stick to that very basic. That's cool. Now comes the market psychology. The market has its own way of thinking, right? And you have to understand how is the market thinking as well. If you understand, if you take control of emotions of your own self, now it's actually time to take control of the market, because the market is here to win, because the market is market makers, right? So they have to win as well. So it's you versus them. It's the buyer versus the seller, or seller versus buyer, whatever. But here it is. Number one, on this left side of things, we have the price, and on the bottom, we have the time, right? And when the market is down, we go into disbelief. When the market starts to go a little bit higher, we see hope, we see optimism, we see belief, thrill, euphoria. And then on the euphoria, this is where we enter, right? This is where the river really is. Do you see? Everything is now coming together. This is where, in the euphoria, that stranger in that village came to tell these two boat riders that, hey, don't enter the river right now. It's not a good idea. Even at this point, I'm going to show you later on with some examples later on. But first, let's understand this one. Euphoria is where you sell things. It's when people take profit out, right? That's when you don't want to buy that PlayStation 5 at euphoria level because it's way too expensive. Let it come down. Let it go down to that Black Friday. You can see, and this move down here. That's what I call, as for me personally, that's what I call 60% discount, right? Let it go for that 60% discount, 64% discount. And you can always see there's like a move down and a move up, and it goes down. Another example that I do want to show you, and by the way, another thing before that is that it starts off like this. It starts off with sideways accumulation, and then you start to pump a little bit. You make another sideways reaccumulation, and then you go up here, and then you make a distribution. You go down, you make a redistribution, you go down, and then you start accumulation again, and then you go up, reaccumulation, you go up. So the market is moving in cycles. Is moving in cycle. It's a cycle, right? It's a wave. And do you remember the time frame that I talked about? Now it's gonna make sense. The market moves in cycle in almost all of the time frame. On the 1 hour time frame, you will see a market cycle. When you shift on the 4 hour time frame, you will see a market cycle. So let's actually combine these things together and try to understand. Let's take maybe 15 minutes, for example. You still have a market cycle going on in here. If you try to still zoom out, you may actually try to spot a little bit of the market cycle. I'm just trying to do this in real time. Okay, I actually think that I did find the market cycle. So for me, I personally think that we had some accumulation down here. You moved up, a reaccumulation. You can see everything is working out. It makes sense, right? And then you moved up again. You made some distribution. You kind of like moved down like here, you made redistribution, you went down again, and then you made another, probably you're trying to make some reaccumulation, maybe to try to go to push to the upside. That's not the best example ever, but we're getting the cycles, right? So this thing happens over and over again on the 5 minutes, on the 15 minutes. So if you want to be a scalper very quickly, you want to take the trade, a 5 minute cycle, well, that works for you. And that's why I say it's a lot of style, very different strategies. But what we want to focus on specifically now, we're going to, before we do that, before we even do this, let's talk about RSI. And then we're going to combine all these things that you have been learning so far, and then it's going to make a lot of sense. First, RSI, get the RSI, it's important.